You're listening to the Weekly Wrap-Up on Sprott Money News.
Greetings once again from Sprott Money News and SprottMoney.com. It's Friday, February the 28th, which means it's time for your weekly wrap-up. I'm your host, Craig Hemke, and joining us as usual is a feeling better, thank goodness, Eric Sprott. Eric, good morning.
Hey, Craig, good to be with you. I don't know if we're up to the challenge to possibly explain what's going to happen, because it's been chaos, needless to say, but we'll give it a whirl.
Give it a roar. Hey, and here we sit on Friday, February 28th. As far as I know, the PDAC conference is still going off this weekend in Toronto. It is the largest mining conference in North America. If you plan to attend, don't forget to stop by the Sprott Money booth, number IE 3049. You get one of those little books when you walk through there, and you'll be able to find us. We'll be selling precious metals right there on the site. Plus, Eric, that's you, will be presenting at 10 a.m. Toronto time on Sunday morning on how to build an investor toolkit. We hope everybody can stop by and see us. Eric, you mentioned these are really uncharted waters. You know, it's not as if, we can pull up the charts from 1918 and 1919 and go back and look and see how the markets traded through the Spanish flu. I don't know what other historical comp there is. You, however, have a long history, a lot of experience, traded through 1987, 2000, 2008. I'm sure you've got some wisdom to share with everybody. I'll just let you take it from there.
Well, those certainly were scary times, as this should be a very scary time to most long investors. Of those of 07, 08, 2000, and 1987, with 1987 was the worst one, because it all happened in one day, and I very much can recall saying to my assistant, if it stays like this, we'll be broke. Well, that was about 10:30 on Tuesday morning. It crashed on Monday, and that's when the market started to rally. But that was, I think we're down 20% in a day, something like that. So that's hard to recover from. Although I wasn't too offended by it, because I could kind of see that NASDAQ was going to roll over. I was well prepared for it. And, of course, gold was bottoming then in 00, so things kind of worked out okay there. 07, 08 was a little different, particularly for gold, because at first they beat up gold, which seemed very counterintuitive to me for a while. And then ultimately it got its legs and, of course, went up to 1900 3 years later. And I think in these kind of environments, ultimately gold is going to be your winner. And we're seeing signs of that now, as the market's down, whatever, it's down 10 or 12 and 15%, and gold's, within spitting distance of its high here, and maybe it's down 2 or 3% for the average guy who's got come in the last week, but it's held up very, very well relative to what we're all witnessing happening to everything else out there. So I still believe that gold will prove its mettle in this environment.
Yeah, and that might be the best comp, I guess, is 2008 or 9, because a lot of us are scratching our heads. You watch, what's the old pun or cliche is they're throwing the baby out with the bathwater, right? Everything just gets liquidated. Yep. But things eventually turned as things calmed down and Fed cash soaked in and all central banks were easing and things kind of lifted back higher. I wonder if we get to a more stable area after this first wave of virus passes, maybe things, I don't know. It's just, like I said before, Eric, it just seems like we're in uncharted waters.
Yeah. Well, there's a lot of things to think about. And, of course, with the developments that are happening, it makes you think about new things. So, for example, one of the new things is, what about the margin calls here? What about the levered players? I mean, these stocks are going down so fast. The guys that are long, where their business is being long calls. Whoa, hello. Yeah. That was pretty crazy. And this market, I mean, it's on a real dive here. And you get to some point where, plus 15% down, you're going to have forced selling. So I wouldn't want to be trying to step in front of this. As we've explained here for about the last 4 or 5 weeks, there can be disastrous effects from a world pandemic. And it does look like we're really, set up for a world pandemic here. So the last thing you'll want to be doing is trying to catch a falling knife, in my mind, okay? Just make sure with your margins, try to get off margin, try to put a little cash away, make sure you own gold, things that can actually outperform the market. But I don't think it's a time for bravery here, stock market-wise.
There are other things to worry about, too. No question about that. Whether it's geopolitics, I'm sure you've noticed the situation that's going on in the Middle East as well. We've got a lot on our plates these days. And again, as you mentioned, this is a time maybe to sit back and watch rather than try to actively be trading. I'm sure you observed what happened to the mining shares yesterday as well. It seems as if fundamentals don't matter in situations like this either.
Well, they are stocks, unfortunately, first and foremost, and when you're in liquidation mode. Of course, not that most stocks are winners, so they're all easy to sell, but gold stocks seem to be a favorite. One thing that we should talk about, I really want to update everybody on some of my thoughts on this coronavirus.
Please.
And the ineptitude of our governing authorities. I mean, I'm shocked at what's going on in the United States here in terms of, you had that first local community infection, and I think the person went to hospital on the 19th of February. 4 days later, they sent a test to the CDC, and 4 days later, they get the results. So for 8 days, they didn't even know. And I guess they didn't know there was a coronavirus going on, and maybe we should check this, And
Right.
then to find out that most states don't even have testing facilities. And then to find out that CDC tests are effective, and yet the powers that be tell us we're ready. I don't think we're ready. And even the stories we're reading about the people that came back from Wuhan and the people that were treating them or marshalling them around weren't properly protected. And the people from the Diamond Princess, they're all horror stories which are likely to lead to this pandemic that is going on. And of course, where it's going on, particularly South Korea, is just totally out of control. Iran obviously was not reporting their cases when they should have been reporting. I mean, how many countries have had their first case that has come from Iran? There's about 10 countries just this week where somebody from Iran went to the country and had the virus, including Canada. Now, it wasn't our first case, but nonetheless, somebody from Iran did make it over here well after things had started. So it's kind of out of control.
Well, and that's obviously the issue. It is out of control. It seems to be growing out of control, and no one really can measure the economic impact of what is going to happen. You mentioned the kind of inept response in the U.S. I wonder if, Eric, what steps do you think the central planners will attempt to take in the days ahead? I mean, do you expect just the liquidity floodgates to open?
Well, that's an interesting question, one I've thought about. And of course, the question is, can actions in the financial arena or the fiscal arena affect the psyche during a pandemic? And I would kind of question that. I don't think that's the answer we're looking for, okay? What we want to know is we're going to be safe. We don't want to keep learning that the odds of some kind of economic meltdown are going up by the day. So I'm not so sure that, if we found out that, China was cutting rates or Japan was cutting rates, that, we're all going to rush in and buy stocks as this epidemic is not under control. So I'm a little skeptical that that's the answer to this particular situation here. And when it comes to the economy, one of the things that people should be aware of, do your own calculation of what GDP should decline by if, as an example, in China, 500,000 people aren't working and the car sales are down 92%. And when some guy says, China's GDP is going to go from 6 to 4, I mean, you got to call them out on it, okay? We're not talking 6 to 4 here. We're talking 6 to minus 20 is what we're talking. That's what we're dealing with here. And of course, it could all get jammed up because of the whole interrelationship of logistics and supply chains and all those things, that one thing causes another thing to not function properly. So the economic consequences are very, very unknown, but when you look at the worst case situation, it could be incredibly dramatic to the downside.
Unfortunately, it certainly is trending that way. We know the stock market looks like it's going to sell off again today here in the U.S. Really one of the worst weeks, I think, on a percentage basis, perhaps we've had since 1929.
I'm not trying to start a panic, but I think even the CDC has come out and said, it's time to start preparing, which means having the health care products that you'll need, having food supplies, water supplies, whatever, have a plan. I think all of those things are important to do. And it was very interesting when on Zero Hedge today, they showed a picture of what was going on in Hawaii.
Yeah.
The stores were getting wiped out of goods. It can happen so fast. So you don't be the last guy in the line here or the last guy to figure it out. You try to take some measure of responsibility towards a very strange and devastating event. You got to take a little bit of precaution. And yes, when I think of the fact that maybe we should be talking about stocks, I'm thinking, well, man, the elephant in the room is the coronavirus. Okay,
right?
And could we care less? The McDonald Mines had a great earnings report of that. Why did Kirkland Lake go down or any of those things? They just seem so trivial when you have a market collapsing, a stock market. I'm talking about a stock market now. That, and between the health aspects and the economic aspects of the market going down, everybody has to deal with that in some way.
Yeah.
Make sure you're prepared financially and make sure you're prepared on a personal level.
Yes. And we did have a lengthy list of names for this week. Some of them we've covered as recently as last week, like Jaguar, if you want to go back and listen to that. You mentioned McDonald Mines apparently had fantastic drill results, and that's worth noting. What I guess rather than try to go through some of these, because like you said, the elephant in the room is, the fundamentals don't really matter in a liquidation based on these kind of unprecedented events. Does someone? We'll just leave it at this. If you have your favorites, is it worthwhile to kind of pick a low number and think, okay, I'll put in a limit order way down below things and see if it fills, or is it really, in your experience, better just to let things sort themselves out and then act, once some stabilities come back?
If somebody's a good trader, you could try to pick something off. Okay, I know for myself, I won't be in there. I won't be the guy who's necessarily going to stand in there and have bids in on all my favorite stocks. It's highly unlikely because, everyone's taking a bit of a beating here. You don't want to step in there and make a mistake on top of the current mistake. And then now you really got to do some fast moving. So, and I'm not a trader. I'm a long-term holder. I'm not going to be selling anything. Although maybe I would if I saw a bid for something and I knew that I could switch from one to the other. I might do something like that, but generally I'm not going to walk in there and choose to sell something. As I said 2 weeks ago, I established some short positions on the S&P futures that have worked out very well, and I still think there's a lot of vulnerability for that market. So, and most people don't feel comfortable putting on shorts, but I've done that many times in my life, and I don't feel uncomfortable doing it. So. It's just a tough time. And unfortunately, it would appear that the leaders of most countries are bumbling fools.
Right.
They're just bumbling fools, whether it was China initially or Iran. Somehow something explodes in South Korea. Don't ask me why. Now we got Italy. Germany almost doubled their cases overnight. What's happening here?
Yeah. Well,
there's no control.
And Eric, you think of the trend last year, and actually for the past decade, of kind of civil unrest and people, from Hong Kong, right, France, you go around the globe. Bungled response to all of this might only exacerbate that in the weeks to come too.
I'm not hopeful. I don't want to give anybody a suggestion. You got to race in here and grab some value. It could get a lot worse before it gets better.
Right. And as we close, it is now the New York Stock Exchange is going to open about 20 minutes. The S&P futures are down 57 points, Eric.
Wow.
Gold's about $10 off its low. Silver apparently is desperately trying to catch down to copper, down another 60 at some odd cents. Look, it's going to be a very interesting time. and again, I almost hesitate to turn this into a commercial for precious metal, but they don't go away, and they've retained their value not only as investments but as money for millennia. And so we'll wrap, as we always do, by pointing out that Sprott Money is where you want to go to add to your stack at what are now heavily discounted prices from even earlier this week. We've had our signature sale going on this entire month. It is about to end, as the month is almost about to end. But there are 25 products currently on sale on the Sprott Money deals page, but really only for the end of the month. So don't miss out on the final days, or even just today, of the Sprott signature sale. Visit the deals page at sprottmoney.com. Find some great products, including RCM 100-ounce silver bars. Of course, you can store metal with Sprott Money as well. This is the time to be preparing for what is really the great unknown. Eric, didn't I just say that S&P futures were down 57? Now they're down 64. We should probably wrap this up and get this posted. I wish you the best. I hope your speaking engagement at PDAC comes off just fine, and stay healthy, my friend.
Yeah, and I wish all the listeners the best, too, in both markets and in life.
Hopefully we'll meet again next Friday and see where we are then. For now, though, Eric, I think we'll wrap up. I hope you're able to have a great weekend. Use your time wisely, obviously, to prepare for all of this unpredictable stuff, and we'll talk again next Friday.
Okay, great. All the best to you. Bye for now.
And from all of us at Sprott Money News and SprottMoney.com, thank you for listening. Have a great weekend.